Hello, this is Quinn with Get Forex Alerts, and what I want to do is make a couple of videos. This will be the first video in regards to how do we get into our trade entries using the matrix strategies and rules, and then how do we apply the strategies and the rules to our trades. The first video here is going to be in regards to looking for a buy signal and how we would manage a trade. So if you do have the manual, if you've purchased the software and you do have our matrix strategies and rules manual, you may want to just follow along here as we go through. What you're looking at here is a 15-minute chart of the Euro USD. And when we first look at a chart, when we bring it up, the process that we go through, what we look at three main things. Where do we have a potential trend line, which if we just move this here, this is actually where price got down to earlier today. We've got a trend line here, point A, point B, two low points. Next thing we would look at is the blue dots here, which is the SAR. And then the third thing that we would look at is, let me grab my cross here, the stochastic. And these are the main three tools that we're using to look for trade entries. And what I want to talk about here first are these blue dots, the SAR indicator. And these are used a couple different ways. One way commonly they've been used is like a trailing stop. As you can see, as the currency moved up here, these blue dots moved up. With each candle there's a new dot, and kind of following the price action up. And what you'll notice is this last dot, next to it we have a red candle. So the stop and reverse, or the SAR as we call it, is an indicator that is trying to tell you that maybe the trend is changing, it's reversing. So we're stopping this uptrend, we're reversing into a downtrend potentially, and that kind of ties into what some of these other indicators are that we use. So when we're looking to get into a trade and we see that this euro dollar has moved up, these green candles have gone up, and now we have reached a top here. This green line is indicating some resistance, or like a ceiling where price just wasn't able to push past through. So when it's reached that, we may start thinking, okay, we're going to look maybe for this blue dot to close on the other side and to get into a trade. We get into buys the same as we do sells. I was just showing this example which led into a sell, but I want to cover a buy. So let's look here and find where we had blue dots changing from going down and into an up. This example here is really not very good, because this candle here, see, we have a green candle, and we're hoping that this next candle would be green. Typically you might see a red candle where this green one is, because price action would be going down in order for this SAR to change. So this blue dot now has gone over underneath the next candle. Okay, we're looking for this to be a green candle. That's really the rules of the matrix say we want a green candle to close, and then we will get into our entry once this candle has closed with the new blue dot down here. This example, again, not the greatest. It has a red candle. Had you gotten in to this trade, it would have worked out. It doesn't mean it won't work out if you get into this trade with the close of this candle. So once we see this blue dot, we're then looking down here in the stochastic to see if it's low. If it's down by the 20 line, that's when we are looking to buy. We want that to line up with the new blue dot, and if those two things line up on the close of that candle, we're going to enter into this trade a buy. Now this, again, probably not a buy we would have taken, honestly. We had a red candle. The stochastic was a little closer to the middle than what we'd like. We're looking for more where the stochastic has dipped down through the 20 here and curling back up. that would give us a strong signal. So this is a better example over here actually, where the blue dot has changed over sides. We have a green candle closing. Our stochastic has come through the 20, is curling back up. This is a textbook matrix buy entry right here. This would have been at a price of 1.4620, and as you can see, a nice price action quickly up here to resistance, where we'd be looking to pull some out of that trade. Either take partial profit or get out of the whole trade, because that's a pretty good movement of pips there. So again, if we were to make a checklist like we do in the manual, you look at your SAR strategy. Did a 15, you ask yourself these questions. Did a 15-minute candle close with the blue dot on the other side of the candle? Okay, check. Is the stochastic indicator near the 20 line if you're going to buy? Check. Is the MACD EMA crossing over the 0 line or above the 0 line if you're looking to buy? General rule of thumb, yeah, if it is crossing over, in addition to the stochastic and this SAR, we see that this MACD here is crossing. These exponential moving averages are crossing together and moving up. So we have a really strong, solid signal. And as you can see, maybe some other folks were using this kind of strategy because it works. So, on both bottom indicators, are they pointing in the direction of your trade? If you're buying, obviously you want these pointing up. And yes, they're pointing up. Everything's pointing to up. And then do you have room to make some pips up to this resistance level? Yeah, sometimes it can get held up at the pivot. You can see a little bit of price action by the pivot, but that shouldn't, if you have a signal, this little blue line here shouldn't stop you. If you have a signal, you take it. That's part of the system. You can always find many reasons to not put in a trade, going, well, the pivot's right there, it might stay below there. No, if you get the signal, you take it. Because if you don't get into the trade, you're not going to make any pips or any money. So that's basically what we're looking at using the SAR strategy to buy. The other strategy to get into a buy situation, we like to look at getting into some pretty optimal entry points on trades has to do with this trend line here. Now this trend line here we can see is going up, indicating an uptrend. So we have an uptrend line. We have 2 points, low points. This is how we draw our trend line. So this is a nice trend line. So we'll be watching this currency to see if it comes back down to our trend line. And a lot of times you'll see an equidistant point where it will come down again. So we have from here to here, so maybe from here to around in this area, you may look to see where this price action ends up. If it retraces further down to this area, and our stochastic looks a little bit low, close to the 20 line, and we really like to see a horizontal support line. So if we have the horizontal and the the diagonal trend line, or if they're converging or near a convergence where they're intersecting, that's a really good place to look for a buy or a place to get long. So we don't know exactly where where on this line, when on this line price is going to come back there, or even if it will. Eventually it probably will. It's it started to consolidate down, and it may break down to this. And if our stochastic is low and we have this horizontal line here, we're going to look to get long, because these trend lines work amazingly well. They just are precision. And just looking up at the top here, a top trend line, you can see if you draw this, you had 2 here, look what happened. Boom, hit it to the pip and came down. That's just the way that foreign currency works. It works with these trend lines. And we're starting to get a nice triangular shaped price consolidation here. So eventually price will break through one of these lines. So that is really what we're looking for as far as getting into a buy trade.